Hey guys, my name is Nicolette Mashile. I am also known as the Financial Bunny. Welcome to the Financial Bunny TV. My hair is not done yet, guys. I'm trying to get my face done. But I actually thought it would be very amiss if I don't start off this video by telling you guys some of the exciting stuff that I've been doing. So I am trying to release and launch my own makeup line. This is because literally on a daily basis, guys, I am using makeup. I was using it when I worked in television. I'm using it now because obviously I want to make sure that when I am in front of the camera, I'm putting my best foot forward. So I am going to be launching my own makeup brand. It's not going to have a lot of products. I'd like to focus on specific products because over the years of sitting in that makeup chair, I've realized which products actually make a huge difference when it comes to a face beat. So the first one that I wanted to show you guys is my satin foundation. The brand is called Anasa. How do the influencers do this? It's called Anasa. So it's a satin foundation with an SPF of 15. I'd like to see if where we are getting this foundation, that SPF can actually be ramped up to at least 30 to 40 or 50 SPF. That would be great, especially for the South African skin, or the African skin rather, with the African sun. So very, very important. I've got a couple of shades in this foundation that again are also for the African skin. So I've gone across the range to look at different types of colors, and I've made sure that those shades are actually available. The next one is, of course, eyeshadow palette. I know that we love to have colorful eyeshadow, but we want our eyeshadow to just complement us at all times. And then the last one that we're also going to be bringing is the Pro Cheek palette. Who does not want, cute little cheeks, whether you want them to be cherry, you want them to be pink, you want them to be red, whichever color that you're looking for, you want to bronze them out, we've got you covered. So yeah, that is my new brand. It's called Anasa Beauty. Anasa is luxury in Swahili. We're also going to be releasing another product under the Anasa umbrella. It's going to be a gin. It's called Anasa Gin. And I cannot wait for you guys to be able to see that one and for it to hit the market. Anyway, so I am in my 30s. Early 30s, I might just add. And I was thinking about it the other day, and I was thinking about what are some of the investments I should have made while I was in my 20s. The most cruel thing about time is that it's a lousy beautician, but it's a healer of all things. But one of the things that you must never, ever doubt about time is the fact that you will not get it back. You don't get your time back, but you can still make up for it. So if I could go back to my 20s, these are the top 5 things that I would invest in. So number 1, I would invest in a home or land. Okay? Simply because I believe that it is an asset that gives you some level of security. It is the only asset in actual fact where you can use leverage debt. Of course, if you are building a business and you go to the bank and ask for a business loan, that is also using a leverage to be able to acquire an asset, right? And your asset would be your business idea. But it's quite difficult to actually get a business loan versus getting a home loan in most cases, because the model and how it was actually just created from the onset. A home loan generally is for salaried individuals. You can get a home loan as a self-employed or a business owner. You will just know that the process is much more difficult and much more longer than you would if you were not salaried. Now, majority of us, when we're in our 20s, we are kind of salaried individuals. And if you are lucky to be a salaried individual, you can apply for that home loan and you may qualify for that home loan, right? Based on the salary that you are getting. However, you may need some sort of support to be able to pay for that home loan. And this is where the subsidy called FLISP, which is a government subsidy, also steps in. So if you can take advantage of the FLISP system, and I'm not saying here go buy a house that's up to the nines. I'm just simply saying buy a simple house. You can get apartments in this country that are less than even 200,000 rand. You just need to be a salaried individual who's got employment, who is earning below 22,000 rand. And if you are earning below 22,000 rand and you're a first-time buyer, so you've never bought a home in your life, you can tap into the FLISP subsidy. It's not easy. So let me put it out there. Like anything in this government, nothing is that easy for you to apply for. But however, if it is successful, it is a great way to actually pay some of your home loan. Now, what you then do is you put additional money into that home loan. So pay it off as quickly as you can. Then it becomes an asset for you that you can use as surety for additional things that you may want to get later on in your life. I think this is something I should have done had I known about it. It's just unfortunate that I didn't know about it. And to be fair, I don't even think at the age where I probably did qualify for FLISP, when I was earning that salary below 22,000 rand, I didn't even know or think about investments. And it's such a pity, such a very, very big pity. The second investment that I should have invested in my 20s, but you still have time to invest in, is risk mitigation. So what is risk mitigation? I was and probably am still, even in my 30s, the most important asset. Other than the fact that I was very lucky enough to invest in property and have a couple of properties where they're giving me a passive income. Even in my business, my current business right now, it requires me, my brain, my health to be in good condition for me to actually derive an income for myself. So even when I look at the passive income that I'm deriving every single month from my properties, plus from my dividends, plus from any interest that I'm earning in my high yield interest rates account, plus in my bonds account, it's just not enough to be able to get me through every single month. I've got a bond to pay for. In fact, I've got 2 bonds to pay for. I've got 2 cars that I'm paying for. So and then I've got to live, and I've kind of built a life where a certain standard has to be maintained for myself to have a good quality life. So I actually cannot live off my passive income. And it then means that I have to protect this asset, which is me. So that's why I say invest in risk mitigation. I think it's important. So what would your risk mitigation look like for self? 1, it is a life insurance. And the earlier you get your life insurance, the better, because you don't have a lot of loadings. You are still young. You probably don't have a kid. Look, it's not always the case in South Africa, but you might not have a kid. You might find that you also don't have a home. So there isn't a lot of stuff that you could insure, but deep down that you are probably one of the few people in your family who's the first to go to school. So being able to leave your family, as Black South Africans specifically, I think even white South Africans, anybody who is South African or African, I think community is a big part of our existence. So if your community and your support system has put you through school, whether it's just your mom or your dad, or your mom, dad, extended family, mom, dad, neighbors, and everybody else, you do want to leave a financial legacy for them. It's not trying to enrich them through your death, but it's trying to say, if I don't get the opportunity to say thank you throughout my living life, I should be able to say thank you if something happens to me. That's 1. And if you do have a kid, probably another very, very important thing to take up, because life insurance is very, very important for your child. Because if you pass away, you should be able to leave your child with something. And it's not just the funeral cover. It's an actual comprehensive life insurance that covers your life, that also has a funeral cover benefit if something is to happen to you. The nice thing about that is most of these life insurance policies also then come with income protection, which is a big one. You could potentially lose your job. And if you lose your job, you should be able to have some sort of income. So this income protection risk mitigation is basically, if you lose your job, you then are able to be covered. In actual fact, I was very excited to speak to the guys at Bidvest Life, because income protection has always been seen as a policy that can only be taken out by salaried individuals. And it's always been difficult for entrepreneurs, who probably are some of the biggest people that need income protection, because it's rough that side by entrepreneurship, right? But also we've got a lot of people in the gig economy, a lot of people who are freelancers, a lot of people who are running their own business, self-employed. And if we're going to encourage this, because we see how high unemployment is in South Africa, if we're going to encourage this type of ways of making money, then we need the financial services sector to come to the party and create insurance policies to cover the people that are deemed as high risk, which is your freelancers, your business owners, your entrepreneurs, your self-employed people, your gig economy people that are hustling, So Bidvest Life apparently has a product like that. I'm hoping to get them into a room and have a conversation with them about that product very, very soon. So income protection is a very important risk mitigation that you should invest in. And I think the last one is temporary or permanent disability. I cannot imagine losing my voice. I just can't imagine losing my voice. If something happens to me and I become disabled in a manner where I cannot speak, that's my entire business gone. So to be able to cover yourself for those kinds of probabilities is very, very important. So I think investing in a risk mitigation strategy is absolutely fundamental, right? The next one I would say is invest really in making sure that you've got a good credit score and taking care of your credit score when you are still in your 20s, because I promise you, when you are ready to buy a home, a car, in your 30s, and you probably might even take a credit card out in your 30s. Let me tell you, the road becomes rough there by the 30s. But also I think mentally you think that by 30 you are in a good space to make certain financial decisions. So you will take out a loan, you will take out a credit card, you may buy a car, you may buy a home, but it's very, 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 very painful to do it with a credit score that is absolutely low or damaged, or it needs like some level of improvement. So don't be like a Nicolette. I mean, I damaged my credit score while I was still in varsity. I bought a laptop, didn't pay for it. The laptop got lost. Or actually the other way around. The laptop got lost and then I stopped paying for it. But I also took out credit with that retailer with the red square. Because it felt like at some point we were being hunted, by retailers to take up store credit. Especially store credit, we were using it for consumption purposes, buying clothes. And then at some point, one of the banks kind of also trapped me with a lanyard and a branded bottle to take out a credit card. So that's a conversation that I'm sure you've heard on my YouTube channel. Ended up actually really damaging my credit score to a point where my first car, I had to take it with a very painful interest rate that at some point, I was very lucky that I was running a business that was giving me quite a lot of money and I could pay my car off. Because if I think about how much I would have paid for my first car that I bought myself with the interest portion, so the principal amount plus the interest portion, I would have paid huge amounts of money. So a good credit score is a great investment, because what does it allow you? What power does it give you essentially? It gives you negotiating power. Okay, generally when you get, especially with a home loan, they're going to give you a rate in principle or an offer in principle. You don't settle for that rate. You go and you take that piece of paper, you go to the next bank and you say, hi, so bank A wants to give me this offer. What are you guys thinking as bank B? Especially when you know you've got a good credit score, you know you've done really a good job of making sure that you're taking care of your credit score. How do you do that? Make sure, one, you do have a credit score. That means that you do need to have some level of credit behavior. So I'm not saying I'm encouraging you to go out there and just take credit willy-nilly, right? Because I know, and we talk about it, we're like, take out a credit card. A credit card will help you build your credit. You can take your own money and put in a credit card and use the credit card as your transactional account, right? The problem is that it comes with a very big discipline element to it. And to be fair, in your 20s, that discipline element is probably not there. There will be that one night when you are in the club and you remember that you've got a credit account and it's got a limit of 5,000 rand, and there you go, bata, and you are blowing it. So building your credit score does require a level of credit behavior. However, it is also important to note that it is a requirement for you to be able to build your credit score. Apparently, in a country like France, you don't even need to do that. They look at your affordability. They still use almost a similar process, but there's no process of credit scores, which is quite interesting. But I know, for instance, in South Africa, we've got it. In America, they call it the FICO score. So it's quite a big part of really determining whether somebody does have the ability to manage credit, right? So once you've built that credit, it's very important to make sure that you remember that this is a legal contract that you have signed. That's why it's called a credit agreement, right? Because you've signed an agreement, you've agreed on an amount that you're going to pay every single month, an interest rate that you're going to be charged on that amount that you have taken out, whether it's a credit facility or whether you've gotten it as actual cash. And you're going to have to pay a minimum amount based on the interest rate, the period that you've been given, and of course the amount of money. So it's going to be called a minimum monthly payment that you're going to pay on a specific date that you have agreed to. And you've got to make those payments every single month on that specific date as per your agreement. And if you've taken up a variable rate, those monies can actually change in terms of how much you pay every single month because your rate is linked to the market. So if there are changes by the Monetary Policy Committee, it means that yours will also change. Now, these are agreements that you have made. So you have to understand that it's a legal document and they can take certain steps if you do not agree or you do not service your loan. So it's not just you losing your high credit score, it's also you having to deal with other financial legal consequences. So paying and actually servicing your credit loan is quite or credit agreement rather, is quite a key process in them determining your behavior. The other thing is, if you've taken, for instance, a credit card of 5,000 Rand, you should not be using more than 50% of it, because you look like somebody that is dependent on credit. So very important to understand credit utilization ratios, right? You can't use more than 50%. In fact, try to limit it as much as possible. So use the credit card when you need to. And I'm using a credit card as the example because I've used it before to say you can use it to build your credit. Now remember, you don't pay interest on a credit card if you paid off every single month, right? So if you're using a credit card and you're using maybe 1,000 Rand, if you make sure you pay it off every single month, you will never pay any interest on it. So they give you access to free money. Essentially, it's not your money, but it's still available for you to use, but you must make sure you pay it back before the billing cycle. So absolutely key for you to remember this. And then the last thing is, stop this thing of consenting to credit checks when you do not need credit. It is hurting your credit score. It's not I just want to check if I can be approved for the I-20, or the Golf has just released a new card. You think I can afford it and you consent to credit check. Don't do that. But most importantly also, sometimes it's very hidden in consent called marketing purposes, marketing and sales purposes. You may find that you've consented for a credit check on an application form that has nothing to do with even financial services, because these guys sell their data and they sell their permissions. So make sure that you're also protecting yourself in that regard, because any hard inquiries where you are looking for credit is going to count against you. So make sure you are not getting yourself caught up in that. So your credit score, absolutely important, because it becomes your bargaining power when you do need to leverage credit to be able to buy the things that you actually need. The next one you must invest in is your job. I don't know if you guys have seen the figures of the high positions in the different 4 banks, the likes of Standard Bank, FNB, Absa, and Nedbank, what those top executives are earning. Okay? Go and look. It is absolutely critical that we do not downplay the big role that employment plays in our economy. People who are employed actually have, 1, salary guarantee to a certain extent. 2, they can actually move up the ranks. There's actually a formula for you to be able to move up the ranks. And that's a conversation we can have another day with, I like Vumile Msweli. She speaks on really how do you she's a career coach, and she speaks on how do you actually become successful in your job. And I still think a job is one of the best ways to actually build, especially in your 20s. If you've got no intention of starting a business from a very, I'm in my business 100%. I promise you, a job is probably one of the best places. 1, you can get paid on a regular basis. 2, you can actually network so greatly. Can network so greatly in a job, guys. When I left my job, I think my first 3 jobs were coming from acquaintances and networks that I had built while I was working in corporate. So I'm telling you, there is the power that comes with a job and employment and using your employer's resources. I'm sure it's very unethical, but I got to a point where I had spoken to my employers and I was telling them, this is what I want to do. I'm going to probably use some of your resources when I'm sitting here. And to be fair, when I declared it, they had no problem with it. Sometimes the problem is that we don't declare, or sometimes we want to do work that is within the same services as our employers. So there's obviously a restraint of trade. But if you're doing something totally different from them, where they could even be your client, some of them really don't mind, especially when you're working for a small employer. I was working for a very small employer. You know what? I think in your 20s, it's the time to shut the noise. Yes, there's going to be co-workers you don't like. Listen, you're not staying there forever. You don't need to make friends with those people, okay? This is the time to climb the ladder. With everything you've got, you bet bambezela, okay? Trampies, what you must climb. Any opportunity to shoot yourself up in a business, you should take it. Of course, within ethical, within ethics, within non-criminality. Please, man, guys, we're tired of hearing about criminals that are doing well, okay? It's not something that we should all be even aspiring to do. Stop criminality. It's just not acceptable. So crazy. You can do this. Just learn it off YouTube. So educating yourself is absolutely important. You don't need a qualification, you need the education. So stop worrying about getting a certificate at the end. Stop worrying about being able to tell people I've got a diploma in this. Worry about the actual information that you are learning. I think if I could go back to my 20s, those are the things that I would definitely invest in. I'll see you guys on the next one. Please do remember, none of my videos constitute as financial advice. If you are looking for financial advice, please speak to somebody that is certified and registered with the FSCA.